This is my next video on the same topic, audit planning. As we all know, this is the most important topic. So I am using the same approach. I am taking out pointers from the course material and I'm finding relevant content. So I hope this helps. I'm Instead of going step by step, I decided to move to point number G, which is discussing the importance of auditor gaining an understanding of the entity, including the applicable financial reporting framework, its accounting policy, significant price of transaction balances and disclosures, and the entity's system of internal controls and recommendation, additional information which may be required for gaining that understanding. So I believe this to be a very easy topic relatively all the other pointers that I saw. So I thought of covering this first. So I have all the relevant content and like all my other approaches, I have done the same. I have broken this point into three different parts. Like first part is gonna cover the understanding of the entity. The second part is gonna talk about the internal controls, and the third part is about the additional information which we need to improve that understanding. Okay, so coming to the first bit, it's understanding of the entity. So, how do you understand what the entity is like, and why is it important to understand the entity? See, the operational side and the processes of an entity are very different and they vary from entity to entity, right? So it is very important for an auditor to understand what the entity does, its operational sides. Only then they'll be able to recognize the risks that are associated with it. So the auditor is required to obtain an understanding of the aspects of the entity and its environment. These include the organizational structure. So the simpler the organizational structure, the easier it is for auditor to grasp what is happening in the organization. However, the more complex the structure, it increases the risk of material misstatements. There could be a lot happening under the table which an auditor might not know because the structure is extremely complex. Second is the ownership and governance. So, how distinct are the owners, the management, and those who are charged with the governance? What happens often is that the owners are also involved, are deeply involved in the management processes. So, the management is not acting in the best interests of the company, instead, it is acting in the best interests of the owner. So, that distinction is extremely important. Number third is the business model to extent to which business model integrates the use of IT. So if your company is integrating IT, then it should be well integrated to mitigate all the risks, and it should not be outsourced, because if it is outsourced, then you expose your company to a number of threats. The first one being theft of data. So these are the two risks that could come with business model. Other than that, auditors need to understand the industry, regulatory, and other external factors, the measures used internally and externally to assess the entity's financial performance, the applicable financial reporting framework, and whether an entity's accounting policies are appropriate and consistent over the years. They're not changing their policies continuously. Also, the auditors need to understand the components of the entity system of internal control and control deficiencies. So these are the few points that the auditors need to understand to grasp their understanding of the entity. And by this, we have covered the first part, the first gist of a point, that is understanding of the entity. Now, moving to the second part, which is entity's internal controls, and it includes five components, and I have discussed five components in very detail. So, first component is the control environment. The auditor considers how the management has responded to the findings and recommendations of the internal audit function. So, for example, if the internal audit has recommended the management to install antivirus software, for example, so the auditor is going to check in that control environment whether they have fulfilled that requirement or not. The second gist is entity's risk assessment process. The auditor gains understanding of the entity's process for identifying business risks and assesses the significance of those risks. And they also continue to address the risks. So, how do the risks arises? This is the first step of the assessment process. and they arise due to changes in regulatory environment, personnel and information systems, technology, products, organizational structure, and so on and so forth. The third component is entities to process, to monitor, controls. It is the process of evaluating the effectiveness of controls over time and taking the necessary remedial action. Fourth, information system and communication. The information system relevant to financial reporting consists of all the activities and policies that are relevant to financial reporting and communication. It includes the procedures within both computerized and manual systems which are designed to do the following things. So it involves processing of account system overrides. It helps resolve incorrect processing of transactions, capture information relevant to financial reporting and other elements. So these are all the things that are a component for. Last component are the control activities. Here, what the auditor does is that they evaluate whether controls are designed effectively to address the risks of material misstatements and also to support the operation of the other controls. And these activities include authorization, reconciliation, verification, and segregation of duties to reduce opportunity for any person to commit. I mean, these are the pointers which you need to really memorize. Reading would not enough, and I'm just skimming through them, so maybe it helps you understand. Okay, to conclude the portion of internal controls, you really need to understand that controls are of two types. Controls can be direct and controls can be indirect. Direct controls addresses the risk of material misstatement at the assertion level, whereas indirect controls only support the direct controls that have been implemented already. With this, we have concluded the portion of internal controls. I want to mention again that this information is for learning. If you really need to understand a topic, you need to dig deeper, you need to research, you need to look up notes online, and you need to go through the study text. It has covered all this content in much more detail. Okay, so when they spoke about additional information, I kind of understood what I understood. Maybe I could be wrong, but what I understood that are talking about the risks of using IT for an entity. All right, so I have listed those risks and I've also mentioned the controls, how those risks can be mitigated. So the first risk is that when you're using IT and when you're using digital technology, many people have unauthorized access to data, which can lead to cyber incidents. Similarly, there could be a lot of ID personas trying to gain access into the system who don't even have to work with the system, but we still might have access to data. And with so many phishing attacks and whatnot, this could be extremely dangerous. Similarly, there could be unauthorized changes to data in the master files. There could be failure to make necessary changes to the application because of manual intervention. So there could be a lot of risks that are arising. However, controls, uh, I listed two controls, which are the most important ones, of course. Managing access. Unauthorized personnel should not get access to that data. Likewise, managing program and other changes to the IT environment, controls over the change management process, segregation of duties over migration, controls over system deployments, and acquisition and implementation. So these are the things that can help mitigating the risk, or which can also help in identifying the risk that is there for using IT. This is all about it. If you do find any additional information, you can mention in the comments, or if you think I could improve my way of talking, or these notes are not helping, if it seems like too much information on the screen, I could maybe convert this into PowerPoint presentation if it is better for you guys. So please let me know your feedback, and I'm going to upload next video on part A and part B of the syllabus. Thanks, guys, for watching.